Okay, we're back with another podcast. I got a very, very special guest of mine. I am excited. It has been a long time wait. We have a lot of questions about today's topic. We are at podcast, I believe, number 14, and we have our very own title company that does all of the title work. I have Rebekah on today. Rebekah, please introduce yourself and tell us what title company you work at.
Hi, I'm Rebekah Gimenez, and I'm with Title Team. We are a title company throughout Florida with our office in Soto, just south of downtown Orlando.
Beautiful, beautiful. And they have an amazing office. I think a lot of people forget about that concept. The title company is where you close. They do all the paperwork. And it's nice to be in a nice office with a whole bunch of refreshments. And they got a lot of them. I think they even have alcohol and so on and so on. Okay, so today we're going to talk about title. What is it? Why do we need it? What does it do? How much it costs, like a ballpark. Rebekah's going to go over some really good stuff. I get this question a lot for when people come down from out of state about, wait a minute, don't we need an attorney? So in Florida, the title company is taking that responsibility and doing everything as if you were out of state. And we're gonna let Rebekah talk a little bit about that. So we can kind of start there, and then we'll go into some questions. But can you kind of give us an idea what makes Florida so different than other states?
Sure. In our state, we have the option of going with an attorney or going with a title company. And title companies or agencies are licensed by the Department of Business and Professional Regulation and also the Insurance Commission, and we are governed by and checked up on regularly with lots of compliance by the Insurance Commission here in the state of Florida, because we are dealing directly with the consumers, and that is important that we are licensed and bonded and insured and dealing with the consumers in good faith on a constant basis. So we have to perform audits on bank accounts. We have to perform audits on files, and we have to be licensed as individuals and as an agency, much like realtors, Jeff. So that kind of probably resonates with you. And we have to report back to our powers that be on a monthly and annual basis. So you can choose a title company instead of an attorney here, and we do perform the same functions. Our role would be limited not to legal outside of a closing.
Perfect. But so the biggest difference is you're allowed to do more in Florida, from what I'm hearing, than other states. Like in New York, I get a lot of customers from New York, New Jersey, or California, and they're like, they went to an attorney, and the fees are a lot more. They're a couple $1,000s and that's not the title insurance. That's not anything else. That's just for the attorney to represent the closing. So,
it can be with the amount of competition that we have here in our state, and also mandates on fees. We are made to charge only what's called the promulgated rate for title insurance. We cannot charge more, and technically we're not supposed to charge less. So everyone is on a level playing field, and we all charge a closing fee, some more modest than others, and that's where we can be more competitive with our internal fees with our own company here.
Wow, I didn't know that. That's awesome. And just to kind of recap, I have Rebekah on. She is the title company that I highly recommend to all my sellers. And the seller is the person that picks the title company. We'll go into that just real quick. When you go under contract, if you are a buyer, you do not want to pick the title company, because if the seller picks the title company, they pay for the title insurance and the dog stamps, which we'll get into that. I'll have Rebekah explain that. But in Florida, Central Florida, the title company is picked by the seller. It's on the contract. It's written that way. It's either seller picks or buyer picks. And if the seller picks, they pay for the title insurance and the dog stamps. And Rebekah is the company that I've been working with for a couple of years. I actually met Met title team with a buyer. I was representing a buyer, and they did such a good job. And here we are, being my number one choice for a title company. And they are located.
Thank you, Jeff.
And just to go over a couple things to look for in a title company. We'll get into a little bit more, but here's just a couple things. I didn't know that everybody charged the same, or is supposed to kind of, and that's not title insurance. You're talking about the actual fee, because I've seen them up and I've seen them down. But you want a title company that comes to you. Rebekah, I don't know anybody that drives to the customers just to assist them, whether they're old, they can't drive, they live too far, or even getting escrow checks. So that's what I look for in a title company, is how easy are they to get along with and work with, and do they answer their phone after banker hours? And they do that, and that's why we're talking to her today.
I think communication is my number one asset and attribute, and I am widely available after hours and also on weekends, and happy to provide that service.
That's a big plus. Not a lot of title companies do that, and maybe they charge extra if they do. I don't know, but I haven't met anybody that does that. So let's. I think I'm trying to hit the things that are the most confusing. When a buyer and a seller go under contract, we're getting a different view. Oh, you're moving. Are you going?
I have to move very briefly here because I'm going to get my plug for my PC.
Oh, okay.
Thanks, guys.
You can stay there. That's fine. You can stay there then. Okay, as long as you can hear me.
I can.
So when a buyer and a seller go under contract, the contract gets sent to a title company, hence Rebekah. The next step is the deposit, the escrow. The title company holds the escrow. They hold it in an escrow account. I don't think it has risk, but they have to hold the escrow, and then that's where the title company starts doing the title search. When after the escrow, can you go over some of the steps that this is like behind the scenes stuff that no one knows that happens when a contract is turned in? We have 3 days to get the escrow in. The seller picked the title company. Rebekah either meets with you to get the check, which is unheard of, which is why I recommend them. But once you get that escrow check, what do you start looking for in that property? Like homeowners associations, liens, expired permits. What is something that, what's the first step that you go towards?
Sure. So we open a file and we immediately place a title search. So what we're doing is we are gathering data from sometimes all the way back to the root of title, the beginning of title, because we want to make sure that as we're insuring, we go back to a point where we are confident that everything is stable, and then we're moving it forward and insuring it going forward. So we're gathering that data and reviewing it here in our office, and then we are contacting both buyer and seller and gathering data from them that would be necessary for us to continue processing the file. There might be a mortgage on the file that we need to get a payoff. There might be a homeowner association that we need to get an estoppel letter. There could be issues from previous deeds that might lend this particular file to some legal issues that we need to get worked out prior to closing. Like you said, Jeff, there could be code enforcement, an expired permit, lots of things that we need to uncover and possibly correct or gather a payoff on. So those things are happening on a rolling basis. Everything doesn't come in all at once, and everything doesn't happen at the end. So we kind of stagger all of that information as it's coming in. We touch that file many, many times and make sure that we have gathered all information. Then from there, we are creating the documents, the legal documents that are needed for closing, and the affidavits that our title company requires for us to provide clearance and clear to close to a lender, and for a cash deal to our underwriter.
Perfect. Okay.
And
A lot of steps.
Those documents would be things like continuous marriage affidavit showing that a seller has not encountered a divorce in the path of owning a home. It could be notices of termination. So say a property has recently had some kind of work done, such as a new roof. There would be a notice of commencement placed on that property, and before we sell, we have to close that notice of commencement with what's called a notice of termination. There are lots of legal maneuvers that need our attention as we are headed toward closing, and we make sure those are all taken care of, and we're checking all of those requirements off before we issue a title policy at closing.
A lot of stuff. And that's why I think a lot of people don't think of the amount of things that are required by the lender, right? A lot of those things are, and I'm sure, does lenders have different requirements that you have to check off as well?
They do. They send us a title order for every borrower that they have, and they will list out sometimes 5 to 10 items that they're looking for. They're looking for some of our title research, such as current and past deeds. They are looking for payoffs. They're looking for what's called a CPL, and that is a closing protection letter. So what they're doing is they're asking us to commit to them that we are going to abide by their closing instructions and that we are going to issue a title policy pursuant to the title commitment that we're giving them at the front end.
Oh, wow.
So the policy comes after closing, but they want to make sure that we are engaged in the process and going to see it all the way through.
So all that is getting the green light to give title insurance.
Correct. Everything we do is pursuant to that title policy. So we are in process of getting all of our requirements taken care of and the requirements of the lender and any requirements that are stated in the purchase and sale agreement between buyer and seller.
Yeah, there might be something different. Now, I have a question. What is the steps that you're taking? I'm sure every state has to follow them. Florida, there's no attorney. Other states, there's an attorney. Are those other states using a title company to do that legwork, or does an attorney do it? Like, how does that work?
No, the attorney will do it. So the attorneys are doing the exact same thing that we are. Oh. And we are only allowed to act in a legal capacity, whereas it is necessary to close a file as a title company. In other words, someone can't just come to us outside of a closing and ask that we prepare documents or handle any kind of legal maneuver for them. We are only permitted by law to handle all legal maneuvers necessary to close a file and issue title insurance.
I didn't know that. Wow, good answer. I didn't know that the attorneys are actually doing the same thing. They can give title insurance, I assume, as well. They can give.
Not all attorneys. You have to be signed up with an underwriter, and you have to be in the business of doing closings. I don't think it would be just so easy for someone who doesn't have that, but I could be wrong. I'm not an attorney. I am a title agent.
Yeah, you got to clear. Yeah, nothing can be held against us. Yep. So title team, y'all have an underwriter, correct?
We do. We have 2 underwriters. We go to Westcor and we go to First American with our files. And both of those are national underwriters with an A rating who are very reliable and have resources for us as agents to handle any issues that we have, including commercial, residential, and anything in between. All underwriting questions, which essentially are legal questions, we have access to these attorneys during business hours and beyond.
Oh, wow. Okay, and I think a lot of people don't know that either. You have a title company, And the title company has to be backed by, like, they have to have insurance. They have to be backed by, like you're saying, I'm a realtor, I got to be with a broker. So a title company is with a bigger entity, and I think those are all over the country. Those two companies, they don't just service Florida, right? They service all over the country and maybe even outside.
Correct. Most of them are national, or some of them are regional, some of the smaller ones, and in multiple states and national type companies that will offer us resources and training and backing and underwriting support of all kinds.
Nice. Now, what's Fidelity? Is Fidelity one of the bigger?
It is. Absolutely it is. Yes.
Because I know there's a couple.
Stewart.
Oh, okay. So those companies don't actually have someone backing them. They're the company. That's just.
Right. Okay. So a distinctive difference between our underwriters. They do not compete with their agents.
Oh.
The one that you just mentioned, Fidelity, has competing offices with their agents, and we choose not to be with that type of underwriter because we feel like we want an underwriter that does not compete with our own product and our own branding.
I see what you're saying. I never thought of it that way. What Rebekah is saying is Fidelity is a big underwriter to provide title insurance and to be, and you need that in order to have a title company. But Fidelity also has title companies all over Central Florida, like Claremont, Orlando, Winter Park, and I know this because I've been to a couple closings. I think my house closed at one of them, and they're all kind of tied together. But then you'll have a title company that is backed by Fidelity. You might not know that, but that's like competing. That's interesting. That's interesting. Very good answer. Okay. Here's two questions that I always get confused on, and I'm sure everybody else does. We have title insurance. There's title insurance, and there is title insurance for the mortgage, right?
Okay.
Can you explain those two things? And do you do
Absolutely.
Does the title company do both of those?
We do both.
Okay.
So there are two types of policies. One is an owner's policy of title insurance.
Okay.
And one is a lender's policy of title insurance. So when you are refinancing your home, the lender's policy is the only one that comes into play. When you are purchasing a home and getting a mortgage, that is also a lender's policy required. Plus, you're purchasing a new home, so as a buyer, you would want to have an owner's policy presented to you at closing as well. If you're doing a cash deal, you would only have an owner's policy. There would be no lender's policy involved because there is no lender involved.
So what does the owner's policy do for the owner, and what does the lender's policy do for the lender?
Okay. The lender's policy protects the interest of the lender in the title of your home. So for the loan amount is going to be the policy amount in that case. And an owner's policy provides insurance for the owner of the property against certain types of claims, which are usually listed in the policy, typical. And there are both of those when the transaction involves a mortgage, also known as borrowing money from a lender.
Okay. And then, but if the owner has a policy with the title company and somebody can't come back, or if they do, and they say, hey, I actually own the property. I was gone. I was invisible. Now I'm not visible. People can see me. That's my property. The owner's policy is going to protect from that person trying to claim the property, no matter what paperwork they have, right? And
the lender's policy would protect the lender for their investment as well. So an owner's policy provides protection to the homeowner if someone sues and says they have some kind of a claim on the property before the homeowner purchased it. And when you purchase a home, you receive what's called a deed, and that shows the seller transferred the legal ownership or title to their home to you as the new buyer. Title insurance can protect you if someone later sues and says they have a claim against your property.
Okay.
And yeah, common claims, just so you know, are things like a previous owner's failure to pay taxes, a previous owner's lender not putting a satisfaction on a mortgage that was paid off, possibly contractors who say that they were not paid for work done on the home before the new person purchased it. Okay, and title insurance for owners' policies are good for as long as you own your home and you do not change the name in which the title is held. Because changing the name, even if it's a wholly owned LLC by that same exact name, and you're the only person in the LLC, the state of Florida recognizes that as a change in entity ownership, and that does void a title insurance policy.
Well, that's good to know. What if so if you change the name on the deed, no matter what, no matter if that's letters at the end, it's going to keep the policy. What if,
unless you're just getting married or something like that,
yeah,
that's not going to penalize you. Or, just by changing your own name by getting married, that's not considered an entity change.
Okay, what about adding someone? What if you don't get married, but you want to add someone to the deed and you're still on the deed?
That's okay.
That's okay?
That is okay, yes.
When you're being removed and something else is being put on, that's when it cancels it. So at that time, they would need to get new insurance?
Correct, yes.
Okay. How long?
Also, sometimes you might want to get new insurance when your property value goes way up and you're still stuck at that lower insurance, very similar to what you do with your home. As far as homeowner contents or things, just say, you've come into a lot of money and now your contents are worth a lot more. You would want to up your homeowner insurance. Same exact thing with title. If you have a policy and you bought the home at $100,000 and now it's worth $800,000, you might want to up your insurance on that as well.
Interesting. I didn't know that. Huh. So how long does the insurance last?
As long as you own your home and do not change title to the home. And then for an owner's policy.
For owner's policy. Yeah, just owner's policy. And then does the insurance have a certain amount that it covers? Like it's covering y'all's time and resources to investigate and to make sure, to squash any incorrect people trying to say that they own the policy. Is there like a limit to the amount of money that it could cover?
The policy limit is the purchase price of the property for the owner's policy, and it is the loan amount for the lender's policy.
Okay, gotcha. And that's someone so that is covering that amount so how would it, let's say your home value went up and it was $100,000, now it's $500,000, but when you bought it, it's only covering $100,000. What would happen in order for you to need more insurance? I mean, it goes up, but is someone could come after you and say, hey, I own that property. Now I'm really going to make sure I get it because it's worth more. They could lose because they don't have enough insurance. Like, is that a possibility, or how? What do you? Well,
gosh, there are endless possibilities. I will say that. In a case like that, I would say the claim has to be limited to $100,000. But if it all happened before that person purchased, then chances are any claims would be less than $100,000 or what they.
You're talking about, so if the property goes up, that means you have different claims on the property. I see what you're saying, and now it's things that have happened while it's not before you bought the property, it's after you bought the property. Things that happen that someone could try to claim the property. I get it. I see what you're saying. Not before, but after. Okay. I have a question. So when a lender does a closing disclosure, which is the most important piece of paper, because that tells how much money needs to go to the title company in order to close, and it shows all the fees. I talk a lot about closing costs. I talk a lot about the closing cost is not the lender getting paid. It's a lot of other money that has nothing to do with the lender. Like 90% of it, 95% of it is.
I agree.
And a lot of people don't get that. Another thing is when a lender sends a closing disclosure to a buyer 3 days prior to signing, and then the title company gets it, and it's different. It's either lower or higher. Mm-hmm. Can you explain a little bit, like, when does the title company and the lender balance out so everybody's on the same page with the amount of money that because I see it's always that the lender's wrong. The lender's never accurate in cost.
Okay. Those fees are initial disclosures based on the lender's first impression of that borrower and the needs of that borrower. And they may not be accounting for everything, such as homeowner association capital contribution, such as the time of year that it closes and which escrows, how much escrow money needs to be held. They may not be accounting for a survey. They may not be accounting for they may not know our fees yet. So some title insurance type stuff. We are also taking a stab at how many pages need to be recorded for the mortgage and the deed, because we don't know those until what's called collaboration begins. Collaboration is the effort between the lender and the title company to determine exact final fees that will be paid by that borrower.
And that happens at the end, or does that happen beforehand, or does all that happen at the end, right before?
3 days prior to closing is when it begins. Ideally, lenders sometimes spring these things on us the day before. So we're trying to give answers to everyone that's asking. Other things that might not be disclosed and the initial disclosure would be home warranties. Realtor fees, like some realtors charge a brokerage fee, okay? Things like that. Also, we don't know up front, or the lender doesn't know up front, if a person is going to buy down their rate. So there could be discount points involved.
Yeah.
Lots of moving parts that may or may not have been disclosed right at the beginning.
There's a lot of things that the title company clarifies. Normally the price goes down, the amount of money, the closing cost goes down. A lot of times I see since the lender services 13 states, Florida is one of the only states where the seller pays the title insurance and the doc stamps. So those two amounts are underneath the buyer money that they need to pay at closing. And then when the title company gets it, it goes to the seller column. So then the amount that the buyer needs to bring is lower because those two items get switched.
Just for clarification, I want to mention that sellers always pay for doc stamps on the deed transfer here in our state. Even if the buyer picks their own title company, the seller still pays that.
Oh, okay. That's good.
I heard you say that earlier, and I just wanted to clarify.
I did not know. I thought it had to be. Okay, that's good. Okay.
Those don't go together necessarily.
Gotcha. Okay. I have a question. Who picks the amount in escrow? Does the title company or the lender pick the amount of months of taxes and the amount of months of homeowners insurance? Do you know who picks that?
That is determined by lender.
Okay.
Most lenders use a standard industry formula, and so they're all pretty similar. So, for instance, right now, this time of year, they are collecting minimal taxes for escrow because taxes are getting ready to be paid, and so they don't need extra in the accounts. By the time the buyer makes their first payment, taxes will have already been paid, so lender doesn't need a large cushion or amount in that escrow account. So right now is the lowest time of the year. Then it's going to start going up from here. Each month that's added to the calendar adds one more month to the escrow.
Oh, because I know around March, April, it seems like they collect 7 months of taxes.
Because we're halfway through the year.
So they're collecting that amount. Well, they're going to get a credit from the seller from January 1st until, let's just say, March. But it seems like, and when they make that first payment, they're paying taxes. The taxes are in that payment. But it seems like they collect a large amount in the middle of the year.
It looks like they're collecting more than is needed because they do want to have a cushion in that account. A cushion being 2 additional months. They just always want to have additional money in the escrow account at a lender's office.
And that goes under closing costs. That word.
It does, right.
That people, when they say, oh, I got to bring all this money to closing, and it's making money. It's not. This is closing cost. This is what's adding up in closing cost.
And Jeff, how I call that to a buyer is I say, this is your money, and it's just being put in an account. It is not being spent right now, but it is your money. So if you take all the things off that are your money, then you have the insurance policy comes off, the escrows come off. And those things are the biggest ticket items.
They are.
On their side. So it will make a big difference. So if you use the term your money,
okay,
it's your money being set aside. It is not being spent right now. It's being set aside for your use later.
Perfect. Okay, so we got that. We talked about closing cost. What else can we talk about closing cost? So closing cost, there's going to be a form, part of the closing disclosure. It's called ALTA. Normally, there's
ALTA.
And that breaks down, it's very similar to the closing disclosure, the amount of money that the buyer needs to bring and the amount of money that the seller is getting or not getting and so forth.
An ALTA statement is a complete financial picture of our transaction. Oh. And ALTA, which stands for American Land Title Association, is a standardized format that the entire country uses. And we are governed by that, and we must disperse that file exactly as the ALTA statement has the items listed. We are not permitted to deviate from that, and if we do, we're going to get a little hand slap or more in an audit.
And you're going to pay, it's going to be an expensive hand slap. It's going to be expensive.
Very.
So, I've had some closings that they didn't have an ALTA, they just had the closing disclosure. And then I had one yesterday that was cash. It was just cash, and it was on the HUD.
Sure.
Well,
we can still use a HUD. We can still use a HUD for cash. We can also use an ALTA for cash. Those are going to have the complete picture on both. The closing disclosures are only used when a lender is involved.
Oh, got you. Okay, and that shows the interest rate. That shows the escrow and so forth. I want to talk about something that a lot of people don't think of. Another thing a title company does is they look into the HOA. You said a word, you said estoppel. A lot of people know what that word means. Can you go into a little bit on what that is? Why do we need to get it? And does it cost anything? Is it free? Does HOAs just give that to you for free?
Not so much. So an estoppel letter is an official legal document that is created by a homeowner association for the purpose of providing all information surrounding that homeowner association's capital contribution, transfer fees, dues, violations, and all covenants and restrictions and everything to do with an HOA. So the law in Florida allows a homeowner association management company or a homeowner association that is managed internally, self-managed, to charge a fee. And that fee has been capped at $250 for standard, and then they are allowed to charge a little more for a rush. Standard says that they have 15 business days to create this document for you. So oftentimes we are forced...
Business days.
Right, so think about that.
Days. That's 3 weeks.
Right. So we are often forced to add this extra fee on to order what's considered to them a rush, and that is a way that they can earn additional fees. Sadly, we often get an estoppel letter back that has a zero balance, nothing owed, and the dues for the year are less than the estoppel letter itself costs.
Yeah.
I would recommend budgeting about $275 when you're doing a seller disclosure, like a seller net sheet rather. I would budget about $275 per homeowner association, and some units have more than one. So therefore,
the master association,
both of them, we have to request both, and both can charge a fee.
Wow. You said the word contribution. What is that?
A capital contribution is what some homeowner associations charge a new buyer to bring them into the association.
Welcome to the neighborhood.
Welcome to the neighborhood. You owe us $500. Some neighborhoods charge thousands. Some charge zero. Many charge zero. But there are provisions in the bylaws for these homeowner associations that allow for these homeowner associations to charge a capital contribution, a transfer fee. Many of them sneak in, new terminology of what things are called, but they're all for the same purpose, and it is for funding the annual budget.
Funding, yep. Funding, putting more money in that budget that somebody has to vote on what it gets spent.
Right.
And where it goes.
I will say that if a homeowner association has an excess, they are required, again, by their bylaws and the law, to lower the dues the following year to make that more palatable and within normal ranges.
If only all of them followed the law, and if buyers in that subdivision knew the law, I think they would be held accountable. I just did a closing in Stony Brook East near Avalon, and I couldn't find this contribution fee on other listings. I heard about it, but I didn't know it was $1,600. So we get the closing disclosure, we get the altna, and there's a $1,600 fee. And I knew that they had one, but I don't remember it being $1,600. And I just did another closing, and it wasn't that amount, but it was a contribution fee. Welcome to the neighborhood, because you know you're going to get something at Stony Brook. That's a gated subdivision, high-end,
right.
Recreational use pool, whatever, all that stuff. But that's good. A lot of people don't know that HOAs charge a fee just for moving in. Some of them have an application required. Back to that.
And approval.
And approval. They have to approve.
And we have to go after that approval and get an original copy, because we have to record that as part of our closing. So we would record it in the order of the approval first and then the deed.
And that's a big deal. Yes,
it is.
Has a lot more weight to it than people think. And, without that, you can't close. You can't.
Correct. Well, we would create a cloud on the title if we did.
Correct. Okay. All right. What else do we got here? We got title insurance, lender insurance. What's another good subject to bring up? What would you recommend? What do you see a lot of that people don't know?
Well, we can help with things like probate. We can work directly with a probate attorney who has been assigned to a file that has had a death and that is going through a probate situation. We are versed on that here at our company. We can also help with 1031 exchange transactions. We're very comfortable with that. and we can work with the 1031 exchange company of a seller's choice or a buyer's choice. It can be on either side. And we can also work with accountants for FIRPTA, which FIRPTA is the foreign tax that we have in our country. If we have a foreign seller, we need to withhold additional income tax, if you want to call it. It's a tax, and they are on the income that a seller earns from a sale or their proceeds. We are required to withhold 15% if certain conditions are present, such as a foreign seller selling to someone who's not going to reside in the property. And there are some legal maneuvers around that we can also help steer sellers and buyers through. Because right now in our country, we have a lot of foreign buyers. So we have people acquiring properties that live in China and Russia and lots of other places that we need to cover.
And do you hold proceeds? You hold a certain amount of money of the sale? Is that what you're saying?
Right, we will. We will hold 15% or whatever a FIRPTA accountant that we would work with, that the buyer or seller has chosen, that we would work with. They give us an accounting number, and they also give us the documents, and then we are going to help them by getting them signed at closing, and we also have to sign as the escrow agent for those things, and then later remit to the IRS.
Oh, wow. Wow. So there's a lot of extra things that
our
company does.
Well, some transactions are fairly simple, and some have what we call hair, and some are just, by nature a little more complicated because they have things like the probate or the FIRPTA or an escrow agreement. Maybe the buyer and the seller have come into some issue that has come up during the processing of the closing. And when that occurs, we are sometimes asked to hold funds or hold keys or hold a deed or something in escrow until certain requirements are met by buyer and seller. Things that were not foreseeable when the contract was written.
But they came up during the contract.
Have you ever had that happen?
Yeah. Things change. Yeah. Oh yeah. Things change. What's another thing? Pretty simple. When someone goes to a closing, what do they need to bring? What are the normal things they need to bring?
Good one. So they should bring IDs, of course, because we do have the responsibility of notarizing for a buyer and a seller, and we need to verify their identity. That's super important. And in addition to that, I would say for buyers, definitely bring 2 IDs if you're working with a lender, so 2 forms of ID. And for a seller, we're going to ask that they bring their wire instructions, because a lot of times we are dispersing proceeds as in the form of a wire.
And it's much easier to send a wire than it is to write a check, I would think.
We do not have a preference over those 2 items, to be honest. We will do whatever the seller would like us to do, and it's included in our one fee of $5.95.
Which is your one fee includes a couple other fees that other title companies charge. So that might sound more than others, but it's really not, because they have like a $4.50 and then some type of search, some type of search, some type of search, some type of search, and then that's really the total. Yours doesn't.
Right. We've recently gone to this one fee format just to simplify and demystify title company fees, and we feel like it's really working for our sophisticated buyers and sellers, and it's much easier to explain, and just one fee on one line and covers everything. So we have in that is wire fees, courier fees, FedEx overnight fees, a title search fee, e-recording to the county, lots of little one items. Now, I will say that sometimes you might see me break some of those out because it will end up being less for the buyer or seller. And I don't just hit them with a lump sum. If I'm doing a cash closing, I will lower that because my work is less.
So to clarify that, what you're saying is it's not the same fee for both sides. Both sides pay a title fee. Just to clarify, when you go to closing, you have a buyer, you have a seller. It's not just the seller pays it. The buyer pays it because they're doing just as much work, if not more work, on the buyer side. But what you're saying is the fees start the same, and then they could either go down if you're not doing all those steps, correct?
Right. And mostly the comparison would be a standard closing with a lender. We are going to go with the $595. But if we have a cash closing, much less is required because we are not working with a lender and not communicating with a buyer's lender on a buyer's behalf. We're simply just very basic closing. And so I personally charge less for those as well.
You made up a good point. Good answer. You charge less is always better. That's what people hear the first. You just mentioned something, communication with the buyer's lender. As a realtor, not just a buyer, but as a realtor, for other realtors, the importance that a title company reaches out to the lender a lot, especially if the lender is not communicating. Can you go over a little bit of the just the time that you put in to, I'm sure you have a system that you follow from when the contract gets turned in until closing to make sure that the lender has gotten you everything. And there's probably like a follow-up system because they don't always respond. They don't always communicate with you.
Lenders are very busy right now. You know, thankfully we have a busy market and we are part of one of the busiest states as far as real estate transaction goes. And I know we're both thankful for that, Jeff. What that means is that lenders are going to sometimes apply the squeaky wheel gets the grease method. So you and I both have to be squeaky. So we are reaching out to lender before they ever reach out to us. I don't know that many title companies do that, but let's just say you're bringing me a contract and you are working with the buyer. I'm going to ask you immediately for buyer lender contact information. And I'm just going to shoot them an email that says, hey, looking forward to working with you. If I have the earnest money deposit receipt and the check or wire that was used, I know they need that and I'm going to provide it. And then I'm going to say, please send me a title order at your very earliest convenience. And then if they don't send that in a day or two, I'm going to follow up until they do, because I want our file to stay on track and stay, ready to close or get ready to close as soon as possible. So I don't wait for them to reach out to me. And then as we get closer to closing, I begin to ask them for final figures and collaboration and a document package and anything else that's required from them to me. And I feel like they appreciate that too. I really do.
Well, they either are on the ball and they're where they're supposed to be, and all of the information that we're getting is accurate because the buyer agent, right, and the buyer and the title company isn't the customer of the lender. The buyer is. There could be some things, some conditions, some commitments that have not been met yet, and that is why the lender is stalling. The lender knows whatever it says to the title company is transparent. So if they say, hey, we just found out their debt to income is bad, the underwriter is pulling up some stuff on their credit report, they got to pay a couple credit cards off, they're behind on child support, they're not going to tell the title company that because the title company is going to tell everybody, and then that's going to make a bad picture. So you want a title company, and that's Rebekah was explaining, whether you're an agent, a buyer, a seller, you especially if you're a seller, and this is, from a listing agent standpoint, a seller standpoint, this is that, the podcast is Jeff Fall Trades. It's not just one person, it's the whole group for everybody, the whole team. You want a title company that's not scared to be persistent, because what a lot of times what happens is the lenders will mess up and tell you they're either going to be on the ball. We have a closing tomorrow that we're meeting, me and Rebekah are. They're either going to be on the ball, like the lender that we're working with tomorrow, which I'll say, Waterstone Mortgage, give them a little shout out. But you have
Very good.
very good, and they have a good system to follow. But you want, going back to Rebekah, she stays on these lenders, and that's what you want. And she has a team and she has a system, because if you don't stay on the lenders and they are extremely busy, you're going to miss your deadline, and it's going to stress out a lot of people. And a good agent is going to make sure that doesn't happen, and a good title company is going to back that agent up by doing that. So I think that's a good note to end on. Did you have?
Thank you, Jeff.
You're welcome. Great job. Did you want to say anything else, or mention anything before we end the show here?
I would just say that if anybody is looking to refinance and would like an estimate of what your closing costs would be as far as title and closing, please reach out to me. I can provide that estimate. And if we have sellers out there that are thinking of selling and we need to, Jeff and I can work together on putting together your closing costs summary and get you more of an accurate net that you'd be working with at a certain price. Jeff and I do those all the time, and it's a great tool for sellers to use. So please call on us to help you with that, and I'm happy to help Jeff with those anytime.
And even for sale by owners, it would be good to call a title company to find out your closing cost. You're trying to do it on your own, which is fine. There's nothing wrong with that. But it would be good to figure out how much what's my actual cost besides a broker commission. What am I actually saving? All of Rebekah's information, it's actually on the bottom of her screen, as you can see. Rebekah can't see that, but it's on the bottom.
I can't.
You can't see that. It's on. Only I can see it. But it's on the link. It's going to be on Facebook. It's in the details. It's going to be on the podcast link. It's going to be on the YouTube link, and it's on the Facebook link, as you see now. So I think we covered a lot today. Going back to that last thing Rebekah said, just to hit on it again, the first thing you want to do when you're thinking about selling a house is figure out how much it costs in taxes, so you can figure out how much your price should be. That's the title company's job. That's who a realtor calls. A realtor calls a title company and says, "Can you give me a seller net sheet?" I wish I could ask her every day for 10 of them, and I wish I could just ask her every day for one of them. That would be great, a new name. But going back to that, that's something that's very important, and that's what they're there to do. Rebekah, thank you so much. It was a pleasure. I'm so excited we got together and did this.
Thank you.
Episode 14. I'm looking over at my assistant here, technical assistant. Episode 14, and please reach out to either of us if you have any questions. Again, thank you for listening, Jeff of All Trades, and I will see you next week.